Any earnings? Yeah, good call. Am I recording? Good call. Make sure I'm recording. It says recording. I'm not touching it, Mike. Leaving it as is. The more I fool around with things, I can botch things up. I got my coffee, Ranchero. You know that. Wouldn't be here without talking to you mopes without a coffee. You know better than that. I don't have a lid on it. Now that you jinxed me. You know me too well, huh? All right, hang on. Okay. All right, very good. All right, so let's talk about what the hell's going on out there. Definitely some interesting stuff. It's kind of, by the way, someone just swept some QQQ calls after the bell. It looks like. What's this little bastard trying to do? Jan 216s. And this is opening activity too after the bell. All right. So anyway, I know this is a webinar. Welcome everybody, by the way. Happy holidays, happy new year to those of you on Twitter and social media. This webinar is open to not just members. I got to keep reminding myself of that because what I wanted to do was a bit of a continuation to our discussion on the members only Sunday webinar, which we kind of came up with a game plan what to expect, and we're getting a little taste of it already. All right, and we'll go in a little more detail. Let me get this out of the way before I forget, just like I forget to record. Anybody who's new, go to wallstreetjesus.com. All right, you could also, let me lower this. You could also get the link off my Twitter if you happen to forget. All right, and a couple quick things. There's a strategy section, basically explaining the basics. Okay, just giving you an idea of what sweeper activity, why it's important, why we use it, blah blah blah. Okay, quick, easy to read blogs. So you'll definitely understand it. All right. And if you're interested in taking a peek at what we do, we offer a 3-day free trial, no credit card required. All right. So no obligation whatsoever if you want to take a peek for 3 days and get an idea of what we do. Also, private Twitter is included in the premium package. If you're looking for just private Twitter by itself, you can go to the product section here, private Twitter, and you put your handle in there and I'll guide you through the sign up. All right, now that that's out of the way, any questions, you know where to find me on Twitter, so feel free to ask. All right. Again, let's talk about what we were talking about Sunday, just a refresher for maybe anybody who wasn't around, didn't listen to the recording or whatever the case. We're at a point now, obviously, where the market stretched, right? A lot of the intermediate term, especially the run-of-the-mill sentiment that your common player, trader, investor looks at on a day-to-day basis is signaling some heat, and for good reason, okay? So meaning, I'll give you an example, the CNN fear greed, right? Everybody and their mother is looking at that all of a sudden, and obviously has been seeing, that odometer in the greedy zone for quite a bit now, all right? And a lot of those run-of-the-mill indicators are totally fine and work really well in range-bound markets, okay? They're made up predominantly of put the calls and a lot of price action stuff, all right? So almost like an oscillator or stochastics, all right? It's not the whole indicator, but it makes up a portion of it. So anytime you get an all-out rip, and especially more importantly, a chase, meaning players weren't involved. Equities were under-owned. They had no exposure to equities as this market ran away from them. You're going to get the put the call is going to break. Okay, you're going to see low readings that you could never possibly have imagined during a range-bound market. All right, and obviously anything that has based off price action that's included in these indicators, they're going to be scorched. Right? There's hardly any dips in this rally that we've been in, so that's normal. Okay, but it's also a good reminder that we've come a long way, and we should acknowledge that, right? And keep on top of our game and make sure we don't get sloppy. All right, because you're already seeing it, and maybe you're doing it. If you take a closer look at the way you've been playing over the last week or so, there's sloppiness out there. Okay, there's a lot of sloppiness out there, meaning players are playing the same name at higher prices. They're buying a stock no matter what it's up, just because it keep going higher, all that stuff. All right, and usually when you start to see that, okay, you're closer to some sort of breather, consolidation, massive rotation, anything of that magnitude. Okay, that doesn't mean it's going to happen instantly. Okay, but a lot of times you're closer to that point when you start to see that stuff. All right, so what we were talking about Sunday on the Sunday webinar, okay, we're coming off, again, if you were long, as long as you were long something, you had a phenomenal year. Okay, whether it was bonds, equities, you name it, it was a solid year. So we're coming off a solid year, an incredible finish, a nice start to January, okay? And it's a good time to reevaluate and come to a conclusion, come to a strategy of, what type of risk and what type of, what style of trading you want to take part here until we see some sort of breather pullback consolidation. Okay, a lot of the stuff that we look at, indicators, etc., big picture wise, they tell us that there's still room as far as big picture. There's still room to the upside. Okay, this is not 1999 yet. Okay, and honestly, I don't even think we're at 2018 January yet. Okay, but that doesn't mean that the market can't experience some sort of pullback where the bulls get a nice kick in the teeth, right, for getting punished for being sloppy, that sloppy behavior. Okay, shake out some of these bulls who were non-believers to begin with and are chasing, and reel in bears again. That's a beautiful thing. You need the bear side of things for a rally to continue. Okay, and a lot of times the strongest rallies, you get these little pauses, these pullbacks, volatility events, whatever the case may be, that shakes out, non-believer bulls and reels in some bears, and that ultimately adds fuel to the fire. Why? Because now every bull that got shaken out needs to get back in if they start to see the market go higher again. And every bear who was looking at the short opportunity of a lifetime, they get run over, they have to cover, and you can see how that adds a lot of momentum in itself, okay, on top of new buying coming in. All right, so that would all be healthy. So at the same time, while we want to be prepared for that, and I know some of you who are bears at heart, okay, you don't want to jump the gun and get reeled in to any little pullback in the market thinking now's the time to make money on the downside. That's the trouble with playing the downside in bull phases. Okay, that's the problem. You get reeled into that side, and not only does it end up costing you money, you miss out on the long opportunity and the setup that's created off that drawdown. All right, so that's the way we were discussing this at lunch on Sunday, and this is how, again, I can tell you how I'm looking at things, right, with the signals we have in front of us, and how I'm playing the game, right? In coordination with what I'm looking at. Okay. So what I want to do now, I'm looking to be nimble, right? If you remember, all probably from, I would say, late summer into the end of the year, most of that time, especially early on during that phase, we were talking about how especially I wanted to buy some of these rotation names with time. Remember, that was the big thing. I didn't really want to trade too much. I didn't want to be active too much. I didn't want to stress the ups and downs of every tick during the day. What I wanted to do was buy some of these rotation names that are under owned, right? That are basically coming off the lows, that are just starting to catch flow, and make sure I have enough time to get paid on them, right? So the way I'm looking at things now is the complete opposite. Okay. I don't want to put on anything with time now, right? Concerned about some sort of pullback consolidation, and maybe concern's the wrong word. Okay. I want to be prepared for it, right? Not only do I not want to get caught too heavily on the long side into a drawdown, but I want enough bullets to fire into that pullback when the time is right, right? To make a nice dent when that thing's ready to turn and head higher. Okay. So what I've been doing, and a lot of you have been doing the same, we've been trimming a lot of profitable names that we're in that we really don't have too much time with, right? January, February strikes. We want to still hold it. We want to still be involved in those names. We can roll it out, right, with some more time. And rolling out with time, it gives you the ability to survive a pullback, right? To sustain a pullback. All right. If you're in February strikes and you get caught in some sort of volatility event like we did in January 2018, you're done. Okay. So if you still want to be in a name and you want to catch that bigger move, especially like, for example, myself, a lot of the commodity stuff that I bought last year, I still want to own. I got a cushion, right, from the upside. And initially when I was buying these things, I was looking for, my plan was to catch the bigger, the larger move. They weren't just trades. Okay. So even before I started buying and adding to these positions, I knew that I would most likely have to sit through some sort of drawdown and consolidation to catch that big move. All right. But to combat that, I have enough time on my bet to do so. Okay, so again, the plan, the strategy, what we've been doing, trimming some of the shorter term stuff, reevaluating what you're holding on to, what you want to keep, what you may want to lock up, may you want to take some profit, leave some, whatever the case, and anything new, right? Anything I'm playing now, I want to remain tactical. Okay, now the trader hat goes back on. Okay, meaning that when I have a profit, if I'm unsure if it's going higher or not, prior to that, I would probably give it a little longer leash and let it move, right? Take the risk of a pullback for further upside. Now, it's not even a question in my head. I'm sell first, ask later. Okay, am I going to miss some further upside on some stuff? Of course. But that's my strategy now, to stay nimble and play off the momentum and the juice that's out there, that's still out there, okay, and we'll talk about this, players chasing into earnings, okay? We can still take advantage of that momentum out there with a lot less risk by staying nimble, okay? And the other thing that's on the fryer, aside from a gazillion other things, but the other important thing you're always going to run into, we're on the doorstep of another earnings season, right? And we know all the risks that come with that. We know what earnings season can do to flow, right? It becomes mashed potatoes. It becomes a mess out there. It becomes really difficult to trust anything you're seeing that's tied to an earnings date. All right. So all that on top of the probability that you made a good amount of money last year and finished it off nice into year end, into early January, all that makes sense right now to be smart, stay nimble, and try to milk whatever's left here before we get some sort of breather. Okay. And we don't, here's the beauty of this game is we don't know what type of breather we're going to get, right? Do we get a volatility attack like we did January 2018? Does Iran strike back and, you get some spookiness over the course of several weeks? We're never going to have that information. We're never going to know that. Okay? So what we got to stick to now and what we got to focus on now are the things that we do know. Okay? What do we do know here? We know that the Fed has pumped all sorts of liquidity into this game where players are forced to now take a risk-on approach. Okay? And I use this line, I've said it before, you guys have heard it out of my mouth. If you ever managed money or know anything about that, okay, what we're seeing now is what I call forced buying, okay? Players are buying Tesla up here, not because they see value up here, right? The smart money is not buying Tesla up 18 after a move like this because they think the risk reward from here is to the upside. They have no choice. They have to own Tesla. They have to have exposure to Tesla going into the quarter. Okay? They have to own AMD. They have to own Baba. You understand? They have to own Apple. So why not, right? Why not look to take advantage of that, right? Because again, we know, right? If you've been following with, you know the smart money doesn't play the game like that, right? They're buying when nobody wants to buy, right? They're buying blood. They're buying things that have been in consolidation for months, years. Okay, so, and we saw a lot of that today. Okay, the flow hasn't been all forced buying. Like yesterday was ridiculous, by the way. We didn't even talk about yesterday. Yesterday was one of the craziest, especially mornings we've seen in a while, flow-wise. All right, but yesterday you had some real buying mixed in. Today, for the most part, okay, it was all forced chase buying in repeat names, all of it. Okay, I would say 99% of it. And the strategy we discussed Sunday, and which we reviewed just now, is perfect for this type of flow. Okay? But again, you're not buying Tesla, right? Up 5 on the day, and we'll talk about that a little bit more too. You're not buying Tesla after a move like this and swinging it for the next month, right? You're looking to ride the momentum. You're looking to take advantage and ride the momentum of that force buying that comes in. All right. So just a quick look, and we'll look at this again. Here's where some of the newer buying, the real buying, is kind of hiding in all this. It's going to be in underbelly names that really haven't got that much attention yet, right? So a name like TCOM. All right, but see, even like a TCOM with this flow today, and I would have had cushion to swing it, I took that profit off the table today anyway, because of my game plan here. All right, Micron, Jesus Christ, the size of Micron. It's ridiculous, and you look at Micron, they started from off the open today. This is not somebody coming in saying, we have to own Micron up here. This is people who don't own Micron that now need to own Micron going into a quarter with all these semiconductors and all. They're better off losing with everybody else that owns Micron than, God forbid, this thing pulling an Apple type move and they don't have exposure to show clients. Okay, that's what's going on in these things. All right. But again, juice wise, like momentum wise, right? Slang, that's my slang word for momentum. You could feel it out there. It's ridiculous. You know, it's ridiculous. And I think it's going to linger until we start seeing some of these names report. And as, as they report, we'll see, how they lay them out after that. Okay. Now, here's the beauty of it all. I think if you wanted to stay ultra conservative, okay, if you wanted to play as smart as you possibly can here, because you're just uneasy about where we are, how far we've come, and what we're seeing flow wise going into earnings season, okay, the smartest approach would be like similar to yesterday or even this morning. If you see some selling in the market, right, on some Iran news or whatever reason they give, okay, and you see sweepers coming in at the pace they've been coming into these things, into weakness, there's no better risk reward than that. Okay, because you guys hear me tell you all the time, right? Sweepers are, in my opinion, the best real-time momentum indicator you'll ever find in this game. All right, so if there's some selling and you get buying coming in like we've been seeing, especially in some of these big names, you're not even chasing intraday anymore if these things are down. That's kind of what we saw yesterday off the open, some added weakness, and they just annihilated everything. So if you wanted to take a really, really conservative approach here, because you don't want to get caught holding anything into any drawdown overnight, my recommendation would be look to buy weakness and look for the aggressive activity into weakness for a day trade, period. Okay. And the reason you can do that too right now is because of the juice out there, because of the force buying. There's enough movement out there, right? A lot of times you don't get enough movement out there for it to even be worth your while, especially you option traders intraday. Now there's enough movement out there, especially if they open them up red and they come in tattooing these things on the call side. All right. So that's my game plan. That's how I'm looking at everything here. I don't want to even try to rack my brain trying to figure anything else out. There's a lot of things going on right now. You have this Iran debacle. You have the Fed and this repo stuff that really nobody has a clue what's going on there. That could end up working out in a good way because this could turn into all-out QE4, okay? But, it's an unknown that people are really scratching their head about, with a market that's come a long way, okay? So there are a lot of things out there that no matter how smart you think you are, you're not going to figure out. And the best way, in my opinion, to look at things right now is to stay nimble and play solely for momentum. And that's a lot different than what we like to do, looking at flow as an indicator of the smart money making a bet on a name, right? So we're looking at sweepers as solely a momentum indicator and a momentum indicator only. I mean, anybody have any questions as far as anything I just mentioned regarding the strategy, the style, or anything like that? All right. And, listen, again, you're going to miss further upside. You could see it, right? Tesla has gone parabolic. A lot of these names have already gone nuts. Okay. So you can't let it bother you when you miss further upside, because initially your strategy is not for that right now, right? That's not what you're looking to do if you're playing this playbook right here. You're looking to just take a small piece off all that excitement going on out there. You're just looking to get in the middle of it, get paid with as little risk as possible. All right. So what else? Everybody, hold on. I asked if anybody have any questions, and then I ignore you. Yeah, good question, John. Are the multiple sweeps the best for momentum? Without a doubt. Blocks don't apply at all right here, okay? If you see a block, take it, flush it down the toilet bowl. That's my, that's my opinion in general, period. But now during earnings season, forget it. Forget it. Okay, because it's going to be an issue each and every day that goes by now. Okay, you're going to see crazy size out there. I promise you, you're going to see crazy size. But we have no idea how clean this order flow is going into earnings. Okay, so another measure to combat that, if you really want to fine tune your criteria, right, like we've been talking about, and play a little bit smarter, play action that doesn't catch an earnings date. So in other words, a name is reporting in February, January sweepers are coming in left and right. Obviously, it's not earnings positioning, right? So now maybe you increase the odds a little bit more in your favor that somebody may have something up their sleeve and playing for news or an upgrade or whatever the case, rather than replacing equity for earnings or any of that crap. All right, but multiple sweeps, what John's talking about, one order, right? When you see one bet, it can mean anything. It can mean anything, right? But when you see sweeper, 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 okay, there's a good chance that that player is being aggressive for one reason, to catch upside in the name. I don't care if he's short the name and is protecting a short. If he's sweeping aggressively, he's concerned about a squeeze, right? Same theory. All right. But the multiple sweeps, what they do is not only are they the better piece of flow for momentum. If you think about just the mechanics of what happens after these orders get swept, they equal momentum. Okay, very simply put, I'll give you an example, John. Somebody comes in, sweeps Micron. Okay, Sharpie comes in, sweeps Micron. I'm a market maker. I don't want that shit on my books. I got to hedge that risk off, right? Then there's another sweep of Micron. Then there's another sweep of Micron. How am I going to hedge that risk off? By buying the stock, right? So that snowballs into momentum itself, right? The mechanics of it creates momentum. And that's not, mentioning anybody else who sees some Sharpie aggressively sweeping Micron and he wants to hop on the bandwagon, right? Following him. So there are mechanics behind why I feel sweeper activity is, as good as a real-time indicator of momentum as you're going to find, But listen, sometimes that's not enough, right? A lot of us, we want to cash our bets, right? It's one thing when somebody's sweeping Micron and we want to just make some money off the momentum. That's one thing, okay? But the momentum's for here and the now. That momentum, 2 weeks from now, today's momentum has nothing to do with what's going to happen in Micron 2 weeks from now, right? So now you're relying on that sweeper cashing a bet. So obviously there's a little more risk. But as far as momentum is concerned, there's nothing better. Anybody else have any other questions before I quickly just go into a couple other things market-wise, just to keep an eye on? Yeah, I will definitely post this on my the recording of this webinar on my stream. I promise. I see it recording now, so don't blame me if it's not. Let's see. All right, so good. Most of you are in agreement and have the same feelings here, okay? And, if you think about like what's going on right now, okay, in the market in general, right? You have some risk out there, right? For the first time in a while, if you think back, what was it? The the Fed, the trade war, and then that all went away as we got into the end of the year, right? Now you have, for the first time in a while, this Iran thing, right, that has surfaced. So you have some added tail risk out there, right? The good thing about that is, as you know, Trump and Iran are threatening each other over Twitter or whatever the case may be, that might create some volatility and some selling pressure from time to time, okay? But what we got to keep in mind over the short term, there's got to be some serious escalation that comes out of that for buyers, those forced buyers that we just discussed, to totally put a halt to all the shopping they're doing. Okay, there's got to be a serious event for there to be a pause in that. All right, so what does that mean? What that means is the likelihood is there are going to be buyers that show up into weakness. Okay, and we don't have to guess that. Okay, we just have to remember that and then look for them in the flow. That's the beauty of the flow. You know, if there are no call sweepers, right? If we're not seeing any call sweepers into weakness, and or we saw flow all of a sudden flip and put sweepers grab the ball, okay? That doesn't mean we should go in and buy weakness anyway, right? They may be telling us that there's something bigger at play, there's something larger at play, if buyers aren't willing to buy into the weakness. All right, so that's where I think sweeper activity becomes really important. Again, over the short term. All right, and that's the way I'm seeing things until we get some earnings, right? Until some time goes by and we see what goes on with this Iran situation. All in all, maybe it ends up leading to some sort of digestion, right? Or a pull. And we want that. We want that, okay? Because right now, as a whole, the music is not ready to stop. Meaning, everybody who needs to get in equities, they're not there yet. They're not all in, is I guess a better way to put it. There's still room, okay? But the longer this goes on, right? The longer this goes on without some consolidation or pull, without some shakeout of bulls and reeling in of bears, okay, that time starts to lapse and that window starts to close. All right, but if we do get some sort of breather here, okay, then all of a sudden it stretches things out a bit. It does the total opposite. You know, I'll give you an example. You get a pullback of some sort of breather, nothing even drastic I'm talking about. I'm just talking about without you even realizing it, they sneak in some weakness without us even realizing it. Just to frustrate the shorts even more who want to catch the big short up here, right? You can't see them doing that. They do it all the time. You got obvious overbought sentiment on the hot side. What do? They put in a jammy like this. And without you even realizing, all of a sudden, you know, you've retraced a bit and calmed down. Shorts can't eat off that. That's frustrating as all hell. You know, it also is frustrating as all hell to the bulls who are chasing, right? So that's a distinct possibility, without a doubt. That's a very easy possibility here. All right, but what will happen, the point I was trying to make is, if you do get something like that or a pullback, okay, then it resets things again. You know, all of a sudden you see the put the call that's been smashed, little by little start to elevate again, right? You get all these sentiment indicators, even the run-of-the-mill stuff that's at extreme greed and hot, all of a sudden start floating back to neutral again, right? You're going to start to hear even the noise around you start to get bearish again, right? The repo shit that's going on or whatever the case, who knows? But ultimately, the likelihood is with the amount of money on the sideline that needs to get into the equity market, ultimately it becomes another opportunity or another entry into a bull run. Okay, if it doesn't, again, we're going to see it in the flow. If it doesn't, we're going to see it in the flow. Let's see what Ani's saying. My problem is to focus on the best action, need to get better SDC. Yeah, you know, Ani, that's not just your problem. That's a lot. That becomes a problem a lot with people like yourself who know the game well. What I mean by that is this. A lot of times I know a lot of people who follow flow, and instead of just like playing the best flow, they like to play names that line up with what they look at and flow. You know what I mean? So like if you're looking at biotechs that are set up technically, you know, you're looking for flow there. So like action and SDC, you see it, but that's not what you were looking for. You know what I mean? You're waiting for flow in something you like already. So that happens often, okay? And that's okay, because when you're early enough in a bull phase, you're going to make money and you're going to stay disciplined doing that anyway, right? Because you trust what you're looking at, whether it's technicals, Elliott waves, whatever the hell may be, right? And you're using the flow as an indicator. What happens is now from this point, until we get some sort of breather and a reset, what happens is you ignore the better flow out there and you're sticking to the names you know and the names you're comfortable with, and you're not seeing clean action there anymore. You know, the likelihood is it's repeat activity, you know, or chase activity or stuff like that. So again, this is my opinion, just from trading flow. Like for me to have the ability to play, like that's all I'm interested in reality, Ani. Like I'll day trade when there's juice out there. I'll day trade a lot of crap. It doesn't have to be the best action. But for me, like I'm not swing trading anything that I'm not impressed with. You know, even no matter what, for the most part, like I'm swing trading the best action out there because I know there's a lot more risk in swing trading, you know. But I wouldn't let it bother you too much. That's all with just getting comfortable with the flow and tying it into your style of trading and stuff like that, you know. So I wouldn't rack my brain over it. Eventually, just like everybody else, like myself and everybody I've seen trade off sweeper activity sentiment, there's going to be a certain batch of action at a certain spot that you feel most comfortable with, Ani, and that's the stuff that's going to be your bread and butter. You know, all the other stuff that you could have made money with and you didn't, or you didn't play it as big as you should have and all that, you're going to learn to just brush that stuff aside. You know how many times I miss nice winners throughout the day in names that, you know, I'm not comfortable with, or spots I'm not, you know how many names are catching action now and that are at spots that I don't play and they just keep going? No, I didn't play Tesla today. You know, and it's almost ridiculous because like you see the order flow coming in and you know like there's going to be some momentum in Tesla, but you know I'm still stubborn and don't get in the middle of it. You know, so it's normal. It's normal. I wouldn't beat yourself up too much over it. So yeah, keep firing questions here. I like everything out there. Listen, I don't see, let me put it this way. I will be concerned, right, when we start to see good news and we're rallying on good news. Does that make sense? Okay. When the noise is positive around me and the market is doing what it's doing now, then I'm going to get concerned. Okay. But when there's, suicidal tweets bashing Trump and Powell and you name it out there, and hating this rally because it's fake and it's not real, it's a bubble, it's this and that, it's tough. It's really difficult for me to be bearish. Again, that doesn't mean I'm not a realist, and there's not going to be some pullbacks along the way. I just think there's the biggest risk out there. I think the bigger risk out there are the big money that get paid to do this, right? That's the beauty of trading your own account. You don't answer to anybody, right? I made this point like a couple of weeks ago. Like, in the steam room, they post what they buy, they sell, they make money, they lose money, whatever the case may be. That's all good. You want to do that, that's fine and dandy, but nobody's forcing you to do that shit. If you're getting in bad habits because you do that, that's on you. You're a schmuck. The beauty of managing your own money is you don't have to answer to anybody, right, but yourself. But the problem is, people who do this professionally, okay, if all this Fed stuff does catch fire, and God forbid there's some inflation out there, reflation, I should say, right? And there's signs of things starting to turn, and they don't have as much exposure to equities as they need to. That's what I think is the bigger, larger risk out there. When that comes, if that comes, who knows, right? I mean, think about it. Commodities, all this stuff, this deflationary trade has been alive and well for a long time, guys. This massive rotation out of equities into bonds and bond proxies has been going on for longer than a lot of you been trading. I don't think you realize that. If things really start to turn, all the stuff that you've been ignoring for what feels like ages in this game are going to catch fire. Just look at Apple. And that's an example. Nothing really, nothing significantly changed there, right? It's just sentiment shifted, and it's almost like it's a re-rating of Apple. That's what's gone on, right? Apple didn't come out with some new product or some hot iPod or iPhone or iShit, right? It's the same damn company, similar numbers, but this thing was stuck for a long, long time, and once it started getting out, and managed money realized it was getting out without them, this is what happens. Now think about this happening to industrial names, commodity names, all economically sensitive names. Does it happen? That's the $1 million question here. But I think, what you're seeing and what we've been seeing is the potential risk of that happening, right? And people missing out. Again, go look at a chart. I'll post it again on my Twitter as a refresher of the fund flows into equities and bonds. It says everything. It says everything. That's why, again, people are comparing it to 1999. I remember at my office, I kid you not, you think it's like a made-up story, I would go down to the cafeteria, the people serving the lunch, the janitor were talking about the internet names they had in their accounts. Everybody wanted to own equities in 1999. 3/4 of the market, all of tech, look like this Apple chart right here. They nuts with no earnings, and no earnings in sight, right? Like, look at what this market did to like Uber over the threat, oh, no earnings and potentially no earnings for a while. Like, this is exuberance? This doesn't look like exuberance to me. They beat the shit out of it. Back in 99, Uber would have opened up 100, rallied another 100, split 2 for 1, rally another 100, split 2 for 1 again, and my mother calling me up on the phone, should I buy Uber now? That's 1999. That's 1999. So, that's the reality of things. And that's why, it gets me a little pissed off on Twitter when I get, but Option Wire, you guys know Option Wire, he hit the nail on the head. Some of these traders out there, they don't know. They never played they're not playing this game long enough, right? If you traded the last couple years, of course this looks like crazy euphoria to you. We were stuck in a trading range. Yeah, WeWork would have went public and that thing would have took off. It couldn't even get to going public now, So again, I'm just giving you guys an example. You hear the noise out there, you got to just block it out, And I'm not tooting, membership and all that, but especially those of you who are members, of the stuff that matters, right? We focus on it every single day, right? Anything that's important that we're not focused, we haven't been focusing on, I always bring it to your attention. An example, right? Like this whole gamma shit that's been going on, right? I'm the first to admit I'm not a gamma guy, right? But I know it's something extremely important right now in the mechanics of the market. So we have to pay attention to that stuff. In addition, obviously, to the signals that have made us money in the past. Speaking of which, on another note there, we're looking for signs out of stress, right? Out of the gamma camp. And we're not seeing it. And again, I touch base with people who know that end of the game a lot more than I do, and they're not seeing it. All right, so we're not seeing any signs of the stuff that matters. We're not seeing any signs of something to worry about out there. Something beyond just your run-of-the-mill pullback. Okay, maybe it shows up, and when we see it, we got to keep our eyes open and act accordingly, right? I mean, I'm talking from, I get labeled a perma bull, and I'm saying we have to acknowledge it. But right now, everything looks fine. We just got to be smart about things going into earnings season and chill out a little bit and play quick. That's it. Play quick. What are you guys looking at over there? CLF, FCX. Yeah, I own FCX. That's one of the names that I've decided to hold through no matter what this market decides to do. I have time. Like I mentioned, mostly commodity stuff is the stuff I decided to hold on to, swing positions. XOP, I still have, I own 3 different lines in XOP. So I still have that, A lot of the industrial stuff, Ani, I sold, unfortunately. They're still going higher. This CP, I sold, all the stuff that I played earlier on before the commodity stuff. And, some of the stuff, honestly, I had like CP, I had a good amount of time. I just decided that was going to be one of the names I took profits in to lighten up on some things, and that's how that played out, But yeah, I like all those names, and I think if they do consolidate or they do pull back, we have to continue to look at these names. All right. We have to be careful here going into earnings season of new entries up here. That's what I'm a little hesitant about. You know what I mean? So I own like this FCX cheaper, up here, even though you got some nice consolidation, it's not as enticing for me to buy here with some time. Let's see, we get through earnings season, there's a little more consolidation there, and we see some flow, then, it could be a different story, right? We get the breather out of the way in the market and stuff like that. But I will say this, and I'll get to your question in a second, Lewis. All these names, I think it applies to everything though, guys, but especially these names are all must-watches, a must-watch off earnings, even for just trades. The banks, you have to watch the banks off earnings. They sell them, you want them to sell them. That's what you don't want to chase green. But like if they sell a JP Morgan or a Goldman, just because they decide to take profits, right? And you see some flow there, that's not a bad setup trade-wise. All right, but you can see, look, right? JP Morgan coming in a little bit before earnings. Just normal pullbacks, What are you saying, Lewis, here? I have my own thoughts, but when you say posting entry and exits, I'll give you a good example, Lewis. One, I used to do that a lot, not in the room, but I used to be out in the open a lot more so than I am now about stuff I bought, sold, entries and stuff like that. But I'm a superstitious person, and that has a lot to do with it. But I'll give you an example. Like, I know, even from my experience, like a lot of people will be like, all right, I love this JP Morgan. I'm buying this JP Morgan. I'm buying a nice size JP Morgan here, right? And, a week or two goes by, JP Morgan looks like shit, and they normally would stop themselves out. But, they were so gassed up on it and made it known to the room that they were gassed up on it that they don't want to admit they were wrong, and they hold on to JP Morgan and try to force a winner out of what would be a loser, according to their plan. You know what I mean? So there are a lot of bad habits that I've seen, even personally, come out of posting buy and sells. And let's face it, let's be honest. Mostly, more people post their sells when they're cashing a ticket, right? Nobody wants to hear about the freaking loser. You know what I mean? So for me, it's like, it doesn't do anything for me. And I'm superstitious. So if I make it known, like you'll see when I tell you guys, because I mean, that's I have to, I have to tell you guys when I like something and I'm excited about it, I'm going to buy it. But, even now, like, I'm not going to go and make sure the whole world knows I'm long a name. I think the market gods will punish me for that. That's like a show of overconfidence and arrogance to the market gods. They don't like that shit. So you'll see me, like, I'll mention it when I'm doing it, and throw updates time to time of what I may be doing with it. But you see, I don't talk too much about what I do, especially percentages and dollar amounts. You never hear that out of me. You'll never hear that out of me. Listen, one-on-one, you might hear that out of me, but you're not going to hear me do that to a room. Again, that's superstition more than anything else. Not because it's bad. I'm just saying I'm very superstitious. I see, Yosti, you're agreeing with me. Happened a few times to me with coworkers. Yeah, it's without a doubt, Yosti. Yeah, exactly. Just, you want to share information. You share something constructive, like, oh, I'm looking to buy it. Here's why, and you get asked about it. Say you did okay with it and you made some money, So, but honestly, you don't have to say anything. You don't have to do anything. All right. So that's my point. If you're having trouble with discipline, I would just eliminate that from your whole repertoire right now. You know, focus on it's hard enough to get yourself right with nobody around to admit you're wrong. You don't want to add any more complication to that. You know, but there's a lot. Like for example, like when markets are shaky and there's a lot of noise out there, uh, and I don't mean to do purposely as a knock to you guys, but a lot of times I just won't look at the chat because like I don't want to hear the bears in the room. You know what I mean? I don't want to hear it because both ways. I don't want them not to rub off on me, but it's beyond that point now. I have enough experience. The total opposite. I don't want to be bullish just because they're bearish, if that makes any sense. So what I do when it gets noisy, when markets get really noisy, when there's volatility and things are going on, I just like to shut out everything and just focus, on sentiment and sweepers, and that's it. Some people block it out well. Some people it doesn't bother. Yeah, and listen, Ed, don't get the wrong impression. I don't think it's wrong to do it. I don't think it's bad to do it. Some people do. Some people don't like when people post if what they're making money with, what they're losing money. Some people do like it, right? You hear a lot of people say, let's see entries and exits, right? And then in same breath, somebody else is saying, we don't want to see it because we're just seeing winners. But you shouldn't care what other people are doing. I mean, no offense, Ed. I root for you, but I'm not going to lose sleep over what, if you tell me what you're doing or not. I'm not going to lie to you. I don't go home tonight saying, oh, I hope Ed tells me what he's playing tomorrow. It's not, I mean, unless you're going to send me an envelope or something. Yeah, that's the thing, John. You shouldn't care, what people make. Yeah, I think entries like explaining to people why you may be looking at a name could be constructive. you know. But anyway, if you struggle with discipline and stuff like that, or you're superstitious, anything that's gonna add some complications to you mentally, emotionally in this game, you want to get rid of. You don't want that to linger. You don't want that to linger. All right, but back to the meat and potatoes. Especially those of you who are members, we're all on the same page here. Be careful. Like it's tougher when you're playing options, obviously, because a stop loss is really difficult. I know some of you guys do it and do it well, but just be careful chasing, a lot of these names, and getting sloppy with them. Especially for swing trades, that's going to be harder to stop yourself out on if you walk into a gap down the next day. Right? No matter what your stop loss is, you gap lower, it's irrelevant. In the intraday, you make sure you're keeping a lid on things, obviously. But there's a lot of juice out there, and eventually, this doesn't last forever. At the least, right? You see things like this at the least they show up. That's at the least these things. It's always the best two to catch them coming out of here. You guys know that. So that's what we're waiting for. That's what we're waiting for. All right. Like the market, for example, we don't know. Nobody knows. Don't let anybody fool you what it's going to look like. Okay. Meaning this. See this here? See how it's already turned into a little breather? Nobody knows what the end up out of this is. We go into earnings season. You got even more balls in the air. But what we're looking for, whether it stays up here or it comes down here, the out of that. All right? That's where we want to see some initial activity, new names getting hit, just like we've been seeing. So we want to see the same flow we've been seeing up until yesterday come out of some consolidation or a pullback. And that's where the juice is going to be. That's where the juice is going to be. Ani, I was telling you, I think I was talking to you or somebody else the other day. All my swing positions, for the most part, like the ones I have decent size on, and I'm holding for at least weeks. The majority of my winners come from, out of that pull. Everything that I'm buying up at near the top here, I'm always quick. You know what I mean? I pass on a lot of stuff. The stuff that I'm most aggressive and I give a little bit of time to marinate, always are coming out of these things. Always come out of these little pulls with fresh action. So that's what I want to get ready for here. That's what I want to get ready for. And who knows what earnings are going to look like. It's a total crapshoot. We get some weakness though, and I think we have some more opportunities on the plate. All right, and on an ending note, I think Gamma closed right under $1 billion. So we'll see. I'll post it when it updates later tonight. Volatility there off Gamma, nothing to worry about yet. And I'm waiting on bull bear positioning sentiment. Now that the fund flows are out and all, I'm waiting to see where we are there. We're definitely not cooked, so don't worry about that. That was positive, if anything, today. I'm talking about the fund flows out of BAML. They did not, you saw the headline, no euphoria. So the likelihood is probably still where it was at, if not maybe even lower, if you can believe that. So that's what we're probably looking at. All right, guys. Have a good night, everybody. Thanks for stopping by. It's recorded if you're just tuning in, and I'll shoot it out on my Twitter when we load it up. All right, good luck the rest of the week, guys. Happy New Year.